Hello everybody and welcome back to our channel. Now if you're familiar with Fund&Grow in any way, you know that we have focused exclusively on business credit since the dawn of time. However, today that changes. We have brought someone here to help discuss a new potential funding option for entrepreneurs and startups alike, the Vice President of Partnerships over at National Business Capital, the one and only Dominic Geraci. Dominic, thank you so much for joining us.
Thank you for having me.
Before we get into the statistics, before we get into how much success that we've been able to gather for businesses working with us, I want to know, for the people watching and listening at home, give us the origin story of NBC.
National Business Capital started 16 years ago, and it started in our CEO's bedroom. Has now grown into a company that's helped finance over $2 billion over the last 16 years and over like 30,000 transactions.
That's incredible. I'm feeling very deja vu. Our origins are very similar here. I started with the CEO in his living room, and we're here now. So that's incredible. So, you know, we obviously have focused predominantly in business credit. However, coming out of the pandemic, coming into this economic climate, it really does appear that business loans are really kind of the future here. And so why do you feel that is the case now, coming out of the uncertainty that we've been in and where business loans are taking people now?
It's interesting because business loans have been going on forever, right? Banks have been doing them. There's been alternative lenders. What's new is that the alternative lending market is really coming up so much, and the banks have tightened on the small business, right? Banks are focused on doing $5-10 million deals to, you know, the bigger businesses,
right.
And it's really hard for the small business, medium-sized business to get bank financing. So there's a world of alternative lenders out there that have, you know, great programs for business owners.
Now, talking about the alternatives and things like that, I've been told that NBC specifically is working with over like 75 different specific lenders to really accomplish these kind of goals. Is that right, or am I way off?
Yes, yeah. But if somebody applies, they don't go to 75 lenders.
Of
right?
course.
So
Yeah.
we have all these lenders on our platform, and we strategically bring you to, you know, the best one or two that might make the most sense.
Now, it's interesting you bring that up, because one thing that we are hit with in some cases by people who maybe are new to funding options is they oftentimes will say, like, well, why couldn't I just do this myself? You know, these lenders are out there, why can't I just, you know, fish in those ponds? And for us, and I'm assuming it's probably the same with NBC, it's about real strategy and really knowing what's going to fit so that you're not launching your credit out to 75 different lenders and fingers crossed, and you're not even close to what they need or are looking for. Am I right on that?
Yes, and it would be incredibly hard for a business owner to go find the right one for themselves. It's nearly impossible, right? There's all these different lenders. Some lenders love restaurants, some lenders love retail, some lenders don't like restaurants, some lenders have special programs for medical. It's very like industry specific, and there's a lot of different things that go into underwriting where it's not just what's your credit score and what do I approve for. It's industry, it's time in business, you know, different kind of factors that are being looked at.
Again, very simpatico, that there is a certain element that feels like, you know, these are obstacles in the way of business owners that they're not even aware of, you know, and works very much with credit. You know, we've dealt with the same thing, that there are banks out there that you would think are going to be just this wide net for any business, and they have their own hang-ups and things that they're looking for. And so to just go in blindly, you're shooting yourself in the foot unnecessarily.
Just to give you an example, like we have, like, let's say call a tier A, right? And there might be like 10 lenders in tier A. We could bring a beautiful business to the lenders in tier A and go to all 10, which we don't go to all 10. But if we went to all 10, we probably would not get 10 approvals. We might get 7 approvals, 6 approvals, right? A couple of them may not love that particular industry, that particular business. Maybe the state, they don't love the state. Like, there's a lot of factors that go into the underwriting. So if that business owner found that one or two that would have said no, and they
happen to apply,
right? If they went to that one, it would be really hard for them to figure this out on their own.
Yeah, and it's not like these lending institutions have like just big billboards saying, like, by the way, if you're in Des Moines, we don't want to lend to you. It's blind. It's a blind shoot. So that's incredible. That really is incredible. So in a general sense, obviously we don't have oodles of time to go in the nitty-gritty, but what are we looking for in terms of qualifications in general? What should a business owner be really looking at to get their ducks in a row to really have the most success with a company like NBC?
So from a business lending perspective, there's probably like 4 main factors that they're looking at, right? And it doesn't start with credit, which is very different than most other lendings. So it really starts with health of the business. So they're looking at time in business, average daily deposits, right? Average daily balances, cash flow, right, is a big factor in the underwriting. And credit score is a factor because you have to have certain minimums to get into certain programs, but it's like the fourth factor. It's down the list. It's not the top factor where like, oh, I have a 750 credit score, I get this. No.
That's wonderful, good job,
right.
but doesn't really apply.
It's not like a credit card. Like, hey, I have a 750, hey, you get almost a credit card you want, right? It's a little different because they're looking at the business, they're looking at the cash flow, they're looking, do you have any negative days? What's your average daily balances? How healthy is this business? And that's what they're really looking at, is the overall health of the business.
Now, as a side note to that, it's not to say, like for example, sometimes with credit, people will run into a situation where maybe they don't qualify for that like A tier kind of credit right away, but there are other options out there. So when we talk about things like what's the health of the business, it doesn't necessarily mean that it has to be like 100%, it's perfect across the board. It sounds like there are options for maybe those in-between steps or maybe even starting out.
There's all different levels of business financing, right? On our platform, we offer SBA loans. We offer receivable financing or inventory financing, which you're leveraging an asset, right? And then we offer term loans, lines of credit, revenue-based financing, equipment financing, so all different types of financing, and you can take some of them in combination with the others. So that's really helping the business owner. What's gonna be best for you?
So obviously, NBC's been around for 16 years now, so this is old hat for you, but for us and our people, this is all like a new incredible thing that we're just learning about. So walk us through, what is sort of the process of going through trying to get a type of business loan with your company?
So for us, it's, if you go through our website, it's a simple 2-minute application where you sign an electronic document, and then the team reaches out to you. And before anything happens, the team wants to talk to you. The team wants to understand what your goals are inside of the business.
Perfect.
We have all these different lenders, we have all these different programs. If we don't understand what you're trying to accomplish, how are we able to help you? Right? So first things first is we have to talk to you. We have to understand the business. We have to understand your goals, the plans, where you want to be, how this is going to make the business better. And that's a lot of things that we're helping while we're getting through the underwriting process to get the best approval for you.
Incredible. Okay. And about how long does a typical underwriting process go in terms of negotiating and getting all the details figured out?
It could be as quick as same day. Right? You can apply in the morning and leave with a line of credit by the end of the day. It can be that fast. Typically, business owners want to review their options and take a little bit of time. But if somebody needed financing by the end of the day, that can happen.
You guys are doing an amazing, amazing job. In fact, I had a couple of stats here that in 7 months of us sort of working together here in tandem, we've been able to, through you guys, achieve over $849,000 for over 15 businesses in 7 months. That's incredible. And for people who are in a situation where maybe, for whatever reason, traditional business credit is not really on the table, or maybe not even what they want, this has been life-changing for so many different business owners. Now, my question from there is, where do you see the future of this alternative financing going?
I only see it becoming more and more prevalent because that's what's happened over the last 15 years. Years ago, this was, everybody thought the only thing to do was go to the bank. Right. The only way to get money is go to the bank or get a credit card. Right. And there's other specialty lenders out there. And a lot of the lenders we use are they're boutique style lenders. They're private. Some of them are private. Some of them have, they're backed by banks, but they're more hands-on underwriting. That's probably the biggest difference. If you would go apply for financing at a bank, right, they're looking at your tax returns. They're taking certain numbers off that tax return. They're putting them into formulas, and what does that formula spit out? Yeah, right? Exactly. And a lot of times that's how the underwriting goes. And in ours, it's very different. It's a more of a personalized approach where. Yeah, we're looking at the numbers, but we're also listening to the story. We're also listening to the opportunity. How is the business going to be better? Where do you see yourself in 3 years? And taking that stuff into account as the financing being provided.
And it's funny you mentioned the boutique style lending. I feel like that's a huge difference maker because, with our experience of applying for credit, same exact thing. You're running into computer systems basically. It's just crunching numbers and that's it. And not really getting the chance to, the average consumer not being able to talk to a human being and really explain well, here's what's going on with my business on a daily basis. And so to be able to offer something like that is incredible. Now let me ask you this, and this is gonna kind of date the interview a little bit. Earlier this year we had a lot of worrisome news about certain banks that were experiencing some difficulties in closing down, and immediately the first question that our clients asked was what does this mean? What does this mean for us? Should I be worried? And so it sounds like because of the type of lenders that you're working with, that's not really kind of on the radar.
It's on the radar. It's changed certain things, right? What's happened is bank financing has become less available to businesses,
Right.
because of what's happened, right? That bank run, SVP, Signature Bank, all that was going on. The community banks, a lot of times they do a lot of the business lending. They lost some of their deposits.
Right.
As you lose deposits, you could do less lending. It's
a domino effect.
It's a domino effect, absolutely. So banks have just moved upstream, and they're going a little bit on the higher side. They're also, from talking to bankers that I have good relationships with some bankers.
Right.
They're very limited on their underwriting capacity.
Okay.
And that's also part of the reason they can't do all of these transactions. And we're doing thousands of transactions to business owners, and some of them aren't the biggest amounts sometimes, right? But the bank just, they don't have the capacity to do that at all.
That's why I think we've landed on the major banks just running everything through computers, because it's a volume thing. I've told clients before, it's not that they want to be cold and unfeeling, but just the volume dictates, hey, we got to find a better system for this. So because we obviously work very closely with entrepreneurs, startups, things along those lines, what is a piece of advice that you would give to a business owner who is starting to kind of dip their toes in the water here? What should they know going into this?
One thing I would definitely say is that a lot of times people look at debt as a bad thing.
Right.
And debt is a bad thing for a person.
Right.
On your personal side. If you have personal debt, that's not good. But on business, debt is a lot of times a tool. And if you use debt as a tool to get yourself to the next level the right way, it's going to get you to that next level faster, right? That would be my biggest advice to a business owner, because a lot of times they'll look at debt and they'll look at it like the way somebody looks at personal debt.
Right.
And it's different.
Yeah,
right? If you're
100%.
putting this money to use in your business, to grow your business and make your business a better business, and it's going to accelerate your growth, debt's a great thing. Debt is not a bad thing, right? So it's very different. We've all been programmed from we were a kid, right?
Right.
That's bad, that's bad, that's bad. Yes, it is, on the person.
Yeah.
Debt is not bad against the business.
Now, you mentioned earlier about different industries fitting better with certain lenders and things along those lines. What is an industry that you've noticed that's kind of on the rise? What's an industry that's getting a lot of funding now that maybe wasn't previously?
E-commerce.
Amazing.
E-commerce, because of the pandemic, a lot of people had moved their sales online, right? And prior to the pandemic, a lot of our lenders were very weary about e-commerce, drop shipping. They didn't understand it yet.
Right.
And through COVID, a lot of retail businesses moved online. A lot of retail businesses did a combination with online. So e-commerce has been a really booming industry because of what the world is at.
Yeah, out of necessity.
Out of necessity, yeah. So that would be the biggest new industry or up-and-coming industry that I've seen over the last year or two.
Not to scare anybody, but has there been an industry that was getting a lot of funding that maybe is struggling a little bit more now, or everyone just basically staying the same?
The one industry that probably it's a little harder to get financing right now is the transportation industry. Transportation's had a little bit of a rough year. There's a lot of competition. Fuel costs are up, transportation costs, all their costs are up, vehicle costs are up, right? So there's a lot of costs are up, and there's a lot of competition.
And that combination makes it a little tougher.
Yeah, it's a little tougher for the underwriters to give as good of approvals as they used to.
Which, I think there's always sort of an ebb and flow of that. We've experienced that. We've had situations where months, years, where perhaps auto approvals weren't necessarily happening as often. So instead, you have to go through that underwriting and negotiating process a little bit more. So I'm feeling that transportation will probably bounce back eventually once everything else catches up and sort of relaxes a little. But that's encouraging. That's still encouraging overall. That's amazing.
Yeah, from reports that I was looking at, they're projecting transportation might bounce back Q1, Q2.
Okay.
So not even too far away.
Yeah.
But just this year's been a weird year for transportation, right? The fuel costs, nobody expected that, and a lot of things happened that was unexpected.
But I think that's really the difference maker in being a business owner, is really seeing those obstacles come up, seeing those changes that maybe we didn't know were going to happen, and learning to adapt and evolve. And I feel like having that as, whether it be NBC or Fund&Grow in your corner will allow that a little more frequently, a little more freely to evolve with changing times versus just you're doing it on your own and now some life happened and now what happens?
Yeah, and you can have Fund&Grow and NBC in your corner, right?
And that's the winning combination.
We provide completely two different products.
And anybody watching, if you want to learn more about business loans and see if you qualify, click the link below to check out our Sprout Business Loan Program. On this page, just click Get Started and fill out a quick contact form. From there, our team's going to reach out to pre-qualify you and connect you with the loan that best suits you, your business, and your goals. And this service is 100% free, so be sure to click the link below and see how much business funding funding you can get today. So in closing here, obviously Fund&Grow is now partnering with NBC, and we are absolutely thrilled at this whole new opportunity for our clients. But what are your closing thoughts for any kind of business owner who maybe is on the fence about this type of lending? What should they know?
See what you qualify for. It does not hurt to see what you qualify for. You don't have to take what you qualify for, but if you have growth plans, if you're trying to get your business to the next level, if capital is slowing that or not getting you to that next level fast enough, just see what you qualify for. It doesn't hurt, right? You're not getting credit inquiries with us. You just want to see what you qualify for, right? And we're going to bring you multiple options. It might be a line of credit, might be a term loan. You might be able to use those two in combination with each other.
Incredible.
So why not just see what you qualify for?
It's not going to hurt.
No, it doesn't hurt. It doesn't hurt at all.
Well, this is incredible. Thank you so much for your time, Dominic. I really appreciate it. I hope this has been helpful to all of our viewers and clients, and look forward to doing a lot more business together in the future.
I look forward to it. Thanks for having me. Appreciate it.